Hello and welcome. Thank you for joining us on this special broadcast of Profit Insights. We're coming to you right after the WTO announced its global trade forecast for April onwards for 2024, and it has come up with some interesting insights, particularly the volume of global trade and how that will play out in the year 2024. I'm joined by a very special guest, Mr. Ralph Ossa, who's the Chief Economist of the World Trade Organization, to help us break down some of the insights that were there for an India-specific context and what it means for the world at large and the global trading economy. Very many thanks for joining us, Mr. Ralph. Pleasure to have you on our show.
Thanks for having me.
You know, one of the first things I want to start with is the global volume of trade that you expect in 2024. Now, you have penciled in 2.6% for 2024. This is expected to rise to 3.3%. And one can assume that this is pivoting slowly towards the levels of 2022, when this was at 3%. Now, what is really underpinning this, and what are the tailwinds you're seeing as it goes on an upward trend?
Yeah, so you already mentioned the numbers, so I don't have to repeat them. And if you want to understand the relative strength of trade in 2024 and 2025, I think you have to understand what the weakness was in 2023. And the weakness was particularly Europe, and the weakness in Europe was driven particularly by inflation. So really, we had an outlier in 2023 where trade growth was relatively weak. In fact, it was negative at the end of the day. The trade volume contracted by 1.2%, and we're just expecting things to normalize. And for trade, the volume of world merchandise trade to grow again, more or less 1-for-1 with GDP.
How exactly do you see this panning out? Because if we look at the current, U.S. consumption inflation, consumer price inflation data, a few hours ago it was released, and it does in fact continue to be a little higher than what was anticipated, at least as per latest data. So how do you see this inflation sort of waning down? Because as of now, high energy prices and inflation, two of the reasons cited in the report, continue to be.
Yes, so we don't expect the inflation problem to go away right away. And you see that also in the figures in the report. As I was saying, the weakness in 2023 comes particularly from Europe. And as you'll see, what we expect is for 2024, we expect Europe to be neither a pull factor nor a drag factor, if you will, on international trade. Most of the growth is really going to come from Asia, and only in 2025 do we expect things to normalize and really have a more broad-based composition of international trade growth. So we are cognizant of the fact that there's still inflation. We're just thinking that it's going down over time.
But it does seem to look like it will grow from 1.2 in 2023 to 2.6. So majority of the growth is expected to happen in 2024, in fact.
Well, so we do expect a normalization in Europe. Yeah, that's for sure, as inflation in Europe comes down. And Europe is, I mean, the reason I keep talking about Europe is because Europe is just such an important share of world trade. So it really matters what we see there.
Right. Another interesting topic in the report, of course, was fragmentation, and particularly how this is a response to what is happening in terms of the vulnerabilities in global supply chain. I wanted to take a minute and delve deeper into that as countries look to reshore and they become more prone to trade more with friendlier geographies that are closer to home. What does this mean for the broader economies, and what is this trend really shaping up to be? How do you see it? You said there are early signs. So how would you explain?
So we see early signs of fragmentation, and I mean, we have various perspectives on this in the report. One thing we do is the most obvious thing, perhaps, is we look at the evolution of trade between China and the United States. And what we see is, yes, trade is growing over time, but it is growing 30% more slowly than trade of these countries with third countries. So what this means is that the trade shares are moving away from this bilateral relationship. But it's not just a US-China specific phenomenon. We've also divided the world into two hypothetical geopolitical blocks based on voting patterns at the UN General Assembly. And what we see, I mean, this is just to get a handle on the statistics. You don't have to take this too seriously in terms of the blocks, of course, but what you see is that since the beginning of the war in Ukraine, trade between these hypothetical blocks is growing more slowly than trade within these blocks. So we're really seeing first signs of fragmentation. And we are concerned about this because we do believe that at the end of the day, the right response to supply chain disruptions, the right response to these resilience considerations that are very prominent now in the policy discourse is really more diversified trade and not less trade. We call this reglobalization.
While we're on this plane of thought, do you see this as a trend to last? Because like you said, it's a concerning thought as it occurs. And what do you think could shake it up, if at all?
Well, it's hard to predict, of course, how this is going to shape up. I kind of think of it in terms of a cascade, if you will. The narrative surrounding globalization, I think, has shifted quite fundamentally. It used to be that basically countries agreed that economic interdependence is a good thing. It's a good thing for peace and prosperity. And I think that has changed quite fundamentally, as you were mentioning before. Now it's all about economic independence or at least economic interdependence with political allies. So things have changed there. That's beginning to affect trade policy, and that in turn is beginning to affect trade patterns. But I think how this is going to evolve is really up in the air, and we are certainly advocating for an approach that embraces trade more strongly, because we do believe that embracing international trade is absolutely crucial for addressing some of the key challenges that the world is facing today.
Indeed. While we're on this subject, services fragmentation is another topic that interestingly came up. Particularly, this affects Indian context, considering that US, one of the examples cited, is trading more with its neighbor Canada. What does this mean for Asian economies? Does this mean they'll have to look for more markets, or does it spell out, in fact, a new era of services trade?
Yeah, so I want to be a little bit careful with that statement, simply because this is just really one example. So normally when we think about fragmentation, we've looked at goods trade quite systematically. With services trade, we're only beginning to dig into the data, and we looked at this one striking example, which was U.S. imports of information, computer, and telecommunications services. And there what you see very clearly in the data, that over time, the U.S. is importing a larger share of these services from North America, in particular Canada, and a smaller share over time from Asia, and in particular India. But I don't want to pronounce a trend here yet. I think it was just an interesting example, which fits into this broader picture that we're seeing in goods trade. But we want to look into this more carefully and systematically.
Okay, so early days too on that trend before we sort of spell out anything on that.
Yes.
All right. Talking of other kinds of disruption, and I think the Red Sea crisis has been something that has dominated the conversation around global trade, particularly in the second half of the 2023 calendar year. There is a separate section in the report that talks very clearly about how you see the impact, cascading down. I want to understand, has there been an estimate of the Red Sea crisis in terms of its cost to world trade so far?
So we don't have an estimate in terms of the number, but we have a broad sense, and the broad sense is that, while this crisis in the Suez Canal is causing, of course, problems to international trade, particularly on the route Asia-Europe, so far it doesn't seem to have any major repercussions. And it's quite interesting, actually, because the Suez Canal is very important for international trade. About 12% of world trade gets channeled through there. About 1/3 of container traffic between Asia and Europe. But the situation we are in now is a different situation we were in when the Ever Given blocked the Suez Canal in 2022. And just to summarize the difference, now global supply chains are just much less stretched, and you can view this from different angles. So demand in Europe is much weaker than it used to be. We have more shipping capacity than we used to have back then. Freight rates are not as high as they used to be. So overall, it's not that there's no problem, but in a way, the detour that some of the freight needs to take around the Cape of Great Hope is something that the logistics industry seems to be able to handle. So as for now, at least, we think that the impact is limited.
Right. On the note of the demand in European markets, and this really springs another thought in terms of how you anticipate that the European and US markets would in fact recover, their incomes would rise, and thereby consumption would increase. And that would mean more of them having a trade appetite, in fact, to get from other economies, export per se.
Mm-hmm.
How do you see this shaping up? You've given a 2-year timeline. At the risk of sort of delving into a previously answered question, how do you see this shaping out in the 2 years to come?
Well, so the United States is actually quite strong and has already been surprisingly strong last year, and you also see that then in the trade figures. So the U.S. is already this year, but also next year, contributing a significant amount to the growth of global trade overall. With Europe, I think we have to wait until next year before it really becomes an engine of growth in international trade. I think in this year, it's really mainly Asia, but also North America to some extent that's having this role.
Right. Shifting more, focus to our home base, which is India. Mm-hmm. It has been a bit of an outlier in terms of its share in trade and how it's performed. Want to get your sense on how you sense India's participation in world global trade panning out. Do you think it being an outlier will continue for the 2 years to come? How do you sense from where you sit?
So in this report, we don't publish statistics specifically on India, or at least not our most common statistics. So let me give you the broader picture for India, and then I will also, for Asia as a whole, and then I'll have something to say about India specifically also. So Asia as a whole, which is of course a large region, also including China, Japan, Korea, many other places. I think I mentioned it before, is really going to be an important engine of trade growth this year and also next year. Not because it's more a normalization, I would say. So it's not that trade is going to grow so much faster than GDP, but it's really recovering, I would say, significantly from the post-COVID disruptions. On India specifically, one thing I can say that we have in the report, we also release data on digitally delivered services. So that's for 2023. That's not a forecast. But one thing that we've been seeing is that digitally delivered services are a very fast-growing component of international trade. And India is performing very well there. We have a ranking, and I think in 2023, India was ranked number 4 after the United States, the UK, and Ireland, where Ireland, perhaps is a bit of an anomaly. So India is really extremely strong in that sector.
Right. Also on this subject of the prediction for growth in Asian markets, it's expected to capture, in fact, a larger share, make a broader contribution, both imports and exports. In fact, imports a little more than exports in the 2 years to come. I'm trying to understand, is this a reflection of a low base, or rather just a reflection of the demand going better in the US and the European market?
So I wouldn't so much say a low base. I mean, if you look at what happened since in the last years, even since the pandemic, I think Asia as a whole has performed very, very well, in particular right after the pandemic. But then there's been a bit of a flattening. And I think we're going to see, we are seeing a pickup there. I think the anomaly is not so much 24 and 25, but the anomaly also for Asia is really 23, where we saw a relatively weak year. And I think that was just manufacturing having a hard time because of high energy prices, but also because of limited demand from advanced economies, particularly Europe and North America.
Right. Slipping into services trade, which is a very important consideration for India. How do you see world services trade shaping up, and in Asia in particular shaping up? If we could get a snapshot of that.
So world services trade is performing very, very well. It was a bright spot in 2023 for sure, where the value of world services trade, so not the volume, grew by 9%, and one of the drivers of this was growth of tourism, driven particularly also by demand from Asia, and also, as I already alluded to before, growth of digitally delivered services. So these are both issues, I would say, where Asia plays a very important role.
Right. And another big Asian economy is, of course, China. And a trend that we've noticed, at least in our conversations, is how countries are capitalizing on China Plus One in terms of looking for trading partners, looking for export partners. Does this trend really extend to all Asian economies like the Philippines, like India, like Taiwan? Do you see that materializing, even going beyond India? Is it benefiting? That's question one. And question two, do you see that trend continuing, the China Plus One strategy?
So it's a very interesting question. We don't have any systematic analysis of this in this report, but it ties into, at least in some sense, with this notion of reglobalization that I was advancing before, where it's really about diversifying supply chains. And we are planning to issue a report, or at least a more careful statistical analysis of this later this year. But at the moment, I don't have anything to say that you wouldn't know already based on anecdotal evidence.
Right, then I hope to connect with you when that report comes out. I'm whittling down to my last question, which is in fact something I was told your department also looks at, which is ICT and of course the issue of the moratorium on that, which was passed in the recent MC13. In fact, a 2-year extension was something that came about. A country like India has also vocally spoken about how perhaps the list needs to be revisited. India is not alone. There have been other countries where sort of plurilateral discussions have been ongoing. How do you view this in the emerging context that some countries are saying that a lot of these items are dated and perhaps it could be disadvantageous to them when it comes to global trade and their growth?
I mean, it's indeed true that digital trade or e-commerce is a controversial issue at the WTO, where different members have different positions. I think what you're alluding to is the moratorium on customs duties on electronic transmissions, which commits countries not to impose import tariffs essentially on things like e-books and streamed videos and so on. And you're right that the members at the last ministerial conference have agreed to extend this moratorium for 2 more years, but then with the view of letting it expire. And you're also right that we call this plurilateral, but basically a subgroup of members is discussing an e-commerce initiative that is trying to carry this forward together with other things among a smaller group. And countries are now, I think, assessing where their preferences are, where their policy priorities are. And it's also, I mean, I mentioned before that India is very strong in digitally delivered services, but it's also not the same. So digitally delivered services are not entirely the same as e-commerce. In fact, part of the discussion that is happening in this multilateral work program is what the exact definition is that members even want to apply to e-commerce.
All right. I think on that note, we're down to the end of our questions. Thank you very much for joining us and giving us this insightful conversation. It's been engaging talking to you. Thank you very much.
Thank you very much. Thanks for having me.
You've been watching NDTV Profit. This is Profit Insights. Stay tuned with us for another such episode.